Good afternoon, everyone. Welcome to the Pangaea Logistics presentation. Thank you very much to Noble for having us once again this year. I will be presenting together with my colleague, our CFO, Gianni Del Signore. My name is Petersen. I am a managing director within the group. I am working in our Copenhagen office with a special emphasis on ice class, but during this presentation I will cover the various aspects of our business. So why don't we get started? So this is just a piece of formality to include our safe harbor statement, as we might hear some forward-looking statements during the presentation. We'll go through the various parts of the business, and Gianni will come in when we cover our financials. We will start with an overview of the group and dive into the details on our strategy. So Pangaea Logistics is headquartered in Newport, Rhode Island. We have commercial offices in Copenhagen, Denmark, and in Singapore. And in addition, we have our own in-house technical management operated out of Greece. So the company is present in all three major time zones in terms of the commercial operations, and are able to provide essentially a 24/7 service and are serving customers all over the world. We are controlling a fleet of at any time between 45 and 60 ocean-going bulk carriers, of which at the current time 17 vessels are owned. We'll be going through what makes Pangaea Logistics a different case compared to many of the other owning companies, shipping companies you will hear from during the next couple of days, including how we employ a pretty unique chartering strategy. So the company essentially operates on four pillars, where the majority of our time today will be spent on the commercial part of the business, which is a niche business, all of them together. Actually, the company was founded back in the 90s on operating in niches only, and deliberately are trying to use their ships and their expertise in a way that generates barriers of entry compared to the normal conventional shipping markets. One such niche is the ice class business, where we own a fleet of ice-strengthened vessels that allows us to serve ports and waterways that are covered with ice for parts of the year. So that would be this time of year, for instance, on the eastern coast of Canada and in the Baltic Sea, Finland, Sweden, and Russia. In addition, we have a ports and logistics services operations, where we are engaging with customers to provide logisticals and stevedoring solutions by offering a wider palette of services. And instead of just moving cargoes from A to B, we are taking over a bigger part of our customer supply chain, thereby leveraging that service into providing premium services. In addition, we have a operating business where we augment our own fleet by time chartering vessels in, depending on the needs of our customers, with a keen focus on risk mitigation, including a focus on backhaul trades, especially in the Atlantic. And in addition, we have technical management services as well. So the ice business and part of our operations is a business that traditionally was using very specialized ships, primarily serving in the winter months in areas and ports with ice. We are in Pangaea also spearheading the development of use of bulk carriers in the Arctic. So in the summertime in the Arctic, such as the Northern Sea Route, we can use these ships to optimize our customers' business and providing unique services to the industrial players who are pursuing and developing especially mineral mining projects in the Arctic. So on the right side of the screen now, you see our fleet of ice class ships. So more than half of the fleet of the own fleet at the moment is ice class, and we, which is also quite a unique thing in the dry bulk business, are able to attract long-term contracts with our customers that are running anywhere from 5 to 10 years. Something that is becoming increasingly hard to do in the conventional transactional shipping markets. So we use our ice class ships in a mix of contract and spot trade, and are able to generate a significant premium over the market earnings of these ships. We last year decided to increase our ownership in this part of the business by buying out a joint venture partner in the existing fleet, thereby increasing our ownership to 2/3 of the 6 1A ice class Panamaxes. In addition, we have a new building program of 4 post-Panamax ships that are backed up by a 10-year contract for use in the Canadian Arctic during the summertime. Generally speaking, we do have a big belief in what is called the new frontier in terms of mineral exploration, and that is the map on the left shows the expansion potential of Arctic dry bulk transportation, which we have a great experience in, being the first company to pioneer the use of the Northern Sea route, moving ships from Atlantic to the Pacific, saving much time and fuel compared to proceeding through the traditional routes via Suez Canal or Panama Canal. The vast potential, both in terms of cost and time saving on the transit voyages and the mineral projects that are being developed, presents a big opportunity for experienced operators. And this is a market that, because of the special nature of the trade and the ships that are being used, have pretty significant barriers of entry, and where Pangaea Logistics is a market leader. This is an area where customer service and relationships with industrial partners are vital. This is not a speculative business. This is an industrial business where the long-term contracts are achieved through long-term service commitments and the need from our customers to have a dedicated carrier for their trades. Then, to argument that, we are engaged in logistics and stevedoring projects. So, and this is an area where if you look at a conventional shipping company is engaged ideally, primarily in moving cargo from port A to port B, and what happens before that and after that, they're actually not very interested in. We are approaching this from a completely different perspective. The ships are required because of the needs of our customers. The customers have a wide-ranging need, and we are looking specifically at providing more services, such as loading, unloading the ship, building out infrastructure around the trades of our customers. What you see in the photo on the top right of this screen, for instance, is a project that we did in Greenland, where we brought the entire loading installation with us and took everything after we finished loading the cargo, and thereby able to load ships, do difficult projects in an area where the environmental standards are very high and very strict. So essentially you cannot see that we were there. We brought everything and we took everything home with us. And other companies are not interested in that, but that gives us an opportunity to offer more services, including ultimately resulting in premium earnings. In addition, we have stevedoring solutions, which are also offered to third parties, where we, both in the Mississippi River and the U.S. East Coast, are building out infrastructure to, again, attract customers and offering more than just A to B transportation. We also want to mention that for 2019, we finalized our first ever ESG report. We believe that being a good corporate citizen is an absolute fundamental necessity to perform well in the business, and that goes especially in terms of limiting our greenhouse gas emissions by operating our ships as efficiently as possible. It also means we have to take care of our people, both that work on the ships and also everybody we come in contact with during our operation. And as a company that operates worldwide, we take this responsibility very serious. We're happy to have issued this report according to the SASB certification, and working especially also with the financiers in terms of being able to obtain better financing as the needs and requirements from our banks in terms of providing more transparency into our operation only increases. And here I will turn it over to our CFO, Gianni Del Signore.
Thanks, Mads, and thank you all for joining us today. Hopefully I can reinforce everything Mads discussed. That shows how we strategically position the company to focus on niches and to a certain degree insulate the company from the volatility of the overall dry bulk market. We believe we offer a differentiated approach and therefore differentiated investment exposure in the dry bulk market for our investors. Unlike some of our public peers, we use ships as tools to serve clients. We seek cargo first and vessels second. We're not afraid to buy, build, or charter vessels as needed. And our nimble fleet allows us to react to these changing market conditions quickly. We've maintained stable earnings across various market environments. We have a wide logistics focus by working up and down the supply chain to support our clients. In the chart below, you can see our performance in the most recent 8 quarters. And we've been ranked as the top performer by Vessel Index Performance Report for 2018 and 2019. And when it comes to our fleet, we efficiently deploy our capital to own or charter in vessels. We don't just own 17 vessels, we charter in an additional 45 ships. And you can see how that compares to some of our US listed peers that are more focused on ownership. Again, with this hybrid approach, we can react quickly and create a variable cost structure. Moving on to recent performance, we were happy to report another strong Q3 result, a seasonally strong quarter for our ice class ships. We reported $15 million of EBITDA, net income of $7.6 million, and EPS of 19 cents a share. We operated in the quarter an average of 52 vessels. Compared to today, our fleet is 62. So you can see the flexibility in the chartering strategy in just a short period of time. Also, to recap some recent initiatives, as Mads mentioned, in September, we acquired an additional 1/3 interest in our Ice Class 1A vessels from our joint venture partner. We then subsequently refinanced 2 of the 6 vessels for 7 years at a fixed rate of 2.95%. We're continuing our fleet renewal program and seeing progress in our Ice Class new build program. And lastly, in December, we announced a quarterly cash dividend of 2 cents a share. Moving on to the next slide, this provides a wider view of our results over the past 6 years. through market volatility, which is shown in the orange line, which represents the Baltic Dry Index. The stability of our results are represented in the bars in terms of revenue, EBITDA, and net income. I think it would be difficult to find many other shipping companies that remain profitable over this period. And throughout the period, or throughout this 6-year view, we also remained active in the S&P market. What you're seeing at the top in the circles is the number of vessels we acquired over this period. So through this market volatility and given our consistent performance, we remained active and slowly grew our fleet. Lastly, moving to our balance sheet and cash flows. We believe we're well positioned to capitalize on market improvements and can continue to deploy capital to accretive projects. We ended September with $45 million of cash after acquiring the additional 1/3 interest in our ice-class vessels. After refinancing our ice-class Panamax vessels, you can see our forecasted debt profile, giving us a sustainable runway to our next balloon payment in 2024. And lastly, over the past 6 years, we've cautiously expanded the business and increased operating cash flows. Looking ahead, we will continue to expand our platform in projects and logistics, and we continue to optimize our assets, and by extension, hopefully we'll continue to generate and preserve shareholder value. With that, I turn it to the floor if we have any questions.
Great, Gianni and Mads, thank you for a very thorough presentation. My name is Fratt, and I cover Pangaea Logistics Solutions for Noble Capital Markets, and I'll be moderating the Q&A. Mads and Gianni, there is one question from the floor about, what is stevedoring? Can you expand on what stevedoring really is? And then why weren't you doing it before? And what drove the decision to start that business? And then can you put a box around the revenue potential for stevedoring and maybe the timing of that, realizing that full revenue potential?
Sure, I'll be happy to speak on that. So stevedoring is essentially the loading and the unloading of the ships. So rather than, for instance, just coming into the port and opening the hatches of the ship and waiting for someone else to offer that service to your customer, we can actually go in and we can do that. We can take on that job through our connections and our experience, and simply it's another another service in the portfolio for the customer. And this is something that we have been doing in variations for a while. I think maybe we are maybe only sort of talking about it a little bit more now as our capability have increased. So by our joint ventures, including ownership of some floating cranes on the Mississippi River, and how can we leverage that into a wider third-party offering, more than we have just used it as something we can do on our own ships, right? So the revenue that this specifically generates is actually, historically, we have reported that in our premium earnings. So when we offer this service to the customer, they get one invoice with everything inside it. That includes ocean freight, that includes the stevedoring. So the premium and the extra earnings we get is shown there, and that is, as Gianni mentioned, we're very proud of those earnings and that premium that we have, been not only by our own estimations, but actually outside people who are completely objective say that we have a market-leading performance in that on that parameter at least. So yeah, I don't know. I hope that covers it.
I'll to answer more specifically. I think for 2019 year to date through the third quarter, the two projects that we're working on that are primarily stevedoring focused are through joint ventures. We're not consolidating these entities, but we are recognizing our share of their income. So through the 3 quarters, it's just under $1 million of net income that's being generated from these projects. But to Mads' point, what's just as important to us is absolutely the growth of and potential of these projects, the ability to network and push more cargo through our vessels specifically. I think that's complementary to our business and how we're maintaining those premiums. So it's almost twofold. We'll see the premium in what our ships and how our ships are performing, but we'll also have the specific projects where we see tremendous potential in the next 3 to 5 years.
Okay. And then broadly, Mads, have you seen any change in, the cargo, demand and sort of, how was 2020 impacted by COVID? And, is there potentially a pickup coming in looking into the sort of the first half of 2021? Can you just talk about sort of what your customers are saying, whether they're making longer term commitments or sort of what the tone of the market is?
Sure. I mean, the tone of the market for sure is more positive now than it was last year. I think people tend to forget that even before COVID really started to make its presence felt more worldwide, it was still pretty bad markets in the beginning of last year. COVID then made them worse, but actually our business adjusted pretty quickly. As Gianni mentioned, we don't own all the ships in our fleet. So when the markets move and our customers don't have the same kind of demand, our fleet simply shrinks, and we batten down the hatches, so to say, and get prepared for whenever this turns, because it always does, and it did again towards the end of last year. We saw a pickup, especially in the Chinese iron ore imports. That is a huge driver on the market. So that combined with the sort of historical seasonality in other commodities really pushed the market up. And I think when sitting here today, I don't think anyone of us expected the market to be anywhere near where it is today. So I think it's great. I still think that we are very optimistic and bullish on especially from the second half this year. I think we still have some COVID, or the world economy still has some COVID things to fight through the next 6 to 8 months or something. But after that, we really like the fundamental outlook, especially because of the curb supply of new ships coming into the market.
Yeah, it's nice to have sort of a head start to the year, if you will, from the normal seasonality that we see in other years. And also, hopefully, we can avoid a black swan event like we've seen in the first half of the last 2 years. Right. We can talk about the ice class, start with overall the market and sort of how the new buildings fit. They're contracted for 10 years. You wouldn't have probably done anything without, a contract in hand. Is the demand that you're seeing for those vessels incremental? Is it growth, or is it cannibalizing? Is it creating more competition for the rest of the market?
That's a good question, Poe. But I think as you mentioned yourself, right? This is not our decision to build the 4 new ships was not driven by a speculative approach. This is based on a actual need from one of our biggest customers that are expanding their operations. They need more ships. And ice class ships, they simply don't exist in the market. It's not something that you can just buy off the shelf from somewhere, or someone has them, in their fleet now. So you have to go out and you have to build it, right? And as is very uncommon these days, there is a long contract attached to this ship. So there's a 10-year contract for these ships. We have 5 or 7 year contracts on our other ships, right? These are very, very difficult contracts to achieve if you do not have any other special service offering to your customers, right? The way that most of the cargo is being traded now in the world is on shorter term, maybe even index-linked pricing, but we are able to attract premium-paying contracts in the niche markets we are serving because we simply are able to provide a service that the customer cannot find anywhere else. So that is the reason for the contracting of the new builds, not because that we have some divine insight into the shipping markets. You know, we like to say we also know what we don't know, but we try to actively manage the downside risk by tying up these assets to contracts in niches where we are able to generate premium earnings. And of course, outside, you know, when we're not using the ships in these contracts, they're trading in a mix of the spot market and shorter term exposure, which in a time like now, for instance, is very positive.
Yeah, that's for the other roughly 60% of the year, right? Or
yeah, so
65% of the year.
Yeah, something like that. One of the other good things about the ice class business is that you tend to earn a premium now in the wintertime and in the summertime when the ships are in the Arctic. Those are the Q1 and Q3 historically are the weakest of the year. So we do retain some exposure to the spot market and are able to capitalize on any movements, but with a cushion sort of that protects the downside of the risk, because that is shipping at the end of the day, right? We can all, when the markets are hot and it's all great, that's fine, but it really is about protecting the downside risk, and we do that by buying the right ship, running them the right way, putting the right crew on board, and having, as Gianni mentioned, the competitive financing that keeps our cost in check, right? So we can weather whatever bad periods that will inevitably come over time in shipping.
Okay. And then, you know, Gianni, can you talk about the opportunity to acquire the additional 1/3 interest in the Nordic, the JV, and then whether the other 1/3 interest might become available at some point in time, and then sort of how you analyze that relative to also bringing on 4 new, post-Panamax ice vessels?
Yeah, I mean, the decision was pretty easy. We're already operating the ships. They're sort of strategically important to Nordic's operation. They're supporting a contract. It was a no-brainer for us to jump on that opportunity when our partners had presented it to us. So the stronger and more involved we can be in the ownership and commercial management of those ships, we will always do it. As far as the other 1/3, we're ready to entertain it, but we'll see. Our partners are happy. The ships are performing well. But if that opportunity presents itself, we'll try to take advantage of it, and that's really what we've always attempted to do, whether it's with joint venture partners, or we'll do it standalone and have to be as efficient as possible with our balance sheet. And I think what I presented there at the end, what our current sort of position is, I think the company is well positioned if that opportunity comes up. Yeah, and then it just strengthens our commitment to that sector.
I mean, it's certainly a bullish or a positive sign that you believe in the long-term view, because these vessels will be in operation for the next decade, likely, right?
It's always been our vision to be the premier ice class owner operator, and that's just another step to get there.
And that enables.
Paul, if I can just add, like the partner we have remaining in the ship is an industrial player. It's a company that believes in it and sees the same sort of long-term view we have on the ice class trade and on the commodity markets as well, right? So they believe in that, and that has worked out great so far.
And then if we could talk about the new builds a little bit more, one on, how you design them, and two, maybe the financing. And it sort of dovetails at least how you designed them and, what choices you made. It sort of dovetails with your view on IMO 2020. Can you talk about the decision on, whether to, how you assess whether you should add scrubbers to the new builds? And then secondly, sort of what propulsion systems you considered, and looking at some of the, potential issues as you look down the road on, potential carbon emission limitations.
Sure, we're happy to talk about that. I mean, I think the fundamental idea behind our business is that the ships we build are based on a standard bulk carrier design, but contains a package of upgrades that allows it to obtain an ice class that gives us access to these premium niche markets. We did, of course, look at scrubbers. We, for a couple of different reasons, decided not to go with that. We fundamentally do not think it's a very good idea to take the sulfur from the fuel, and instead of just putting it out through the exhaust, you're just putting it into the water. It doesn't seem like a long-term viable solution. And when there is a perfectly fine alternative, which is to buy cleaner fuel, that is possible, that is available. And we do not ref what I said earlier about our focus on ESG, and we did not think that for ships that operate in these sensitive environmental areas, we didn't think that was a long-term winning solution. And in addition, we didn't really believe in the spreadsheet calculation in terms of whether or not it made sense with the oil prices, and it turned out to be one of the better decisions for a while that we didn't spend that much money putting these on board, because that business case is not really being validated at all right now with the way the fuel prices have gone, right? So it's not a good fit for our business. It's not something that our customers want. They also understand their obligation and to handle their transportation in a cleaner way. And we just fundamentally didn't believe in the business model, right? We have to think very, very hard every time we spend any money from our shareholders, and we did not feel that this was a smart way to use it. In terms of propulsion, we looked at the viable alternatives that we have now, which primarily consists right now of LNG, which again is not a fossil-free fuel. It is sort of a half solution to a very complicated problem. The challenges around storage of LNG in the quantities that we would need in our business proved it simply to be uneconomical for us to do that. It is, if you're running shorter voyages, predictable scheduled sailings, yes, then maybe it would work. But for us, we didn't feel that it was a good solution. So we went with a design that is very efficient and is very economical. And we instead of rushing out and spending money on something very expensive without sort of a good idea that this would work out, we are sort of course monitoring and seeing what can be done, and maybe there will be potential for retrofits later. But we have taken extreme care in designing the ship and the equipment that is on board the ship to have as an efficient as possible ship.
Okay, and then Gianni, if you could talk about how you financed the 4 new builds, and what alternatives you considered, and what were your goals as far as just financing these vessels?
I think, as always, it's to just be as efficient as possible. So we are doing a project with a joint venture partner, or a financially focused partner. And as of today, we've fully committed our capital to the project. There's the continued deposits that are coming up that will be funded by our partners. So we're fully committed, and yeah, from a financing perspective, I think for us the most important thing was having clarity to delivery, making sure we knew exactly that we had a commitment and what it would be there at delivery. That was probably the most vital factor for us, and luckily we were able to accomplish that. We secured under a sort of a sale-leaseback structure and a bareboat charter structure from the yard. So it's a 15-year profile. It gives us a nice runway, and we were able to get that commitment early on.
And you didn't have to raise any equity capital. And could you talk about the question that I got from the floor leaves the impression that the financing wasn't as shareholder friendly or favorable as it possibly could be. Could you just address whether you feel that way, and just I guess just talk about how you approached it from a shareholder value standpoint?
Yeah, I think we always. I'm not sure the real nature of the question, but I can discuss how we sort of assessed it. We're always cautious on leverage. We don't want to put ourselves in a position where the financing is not sustainable. But on these ships, we feel that the 15-year profile and the leverage we have is sustainable. With our partners involved, we think we can manage these ships given the rate environment and the contract that's there. I'd love to tap into the public markets. I would love to have access to that market. Our price is, I think, undervalued right now. We're trading well below where I believe the true value of this company is. So we look for alternatives. We have to be creative and efficient. And I think we accomplished that with this financing.
Yep. Great. And as we look to wrap up, is there anything we didn't cover today that you'd like to highlight? Anything that you think that you should leave with investors that we haven't covered today?
I mean, I think we offer something very different than a lot of the other shipping companies you'll hear from, and that is simply a focus on more actually developing the relationships from the customers who actually put the cargoes on the ships. So we believe in those long-term relationships and a focus on finding markets where we can make a positive difference to the customer. We are not here to try to predict if the BDI will be up and down tomorrow, right? Well, no one, are able to do that at all. And anyone who tells you they can, they're wrong, right? So we offer a real interesting possibility with an enormous upside potential, but with a company who are a conservative focus on minimizing the downside risk through the things we talked about today. So I think if the takeaway when you compare us to others is that this is not about the steel. This is about the cargo. It's about the relationships. It's about people at the end of the day, right? So.
Yep. I couldn't have said it better. Completely agree with both your and Gianni's assessment as far as the value that you add and to not only shareholders, but, beyond just the steel. With that, why don't we wrap up? I want to thank Mads and Gianni for joining us this afternoon. Thank you for a very illuminating presentation, and I really appreciate your participation in NobleCon17.
Thanks, Bo.
Thanks, Bo. Thanks for having us.